Between now and next year, almost everything in Jamaica gets more expensive. Not because the US dollar jumped, not because shopkeepers suddenly got greedy. It's because, for the first time in 10 years, the government has dropped a full tax package costing almost 29.4 billion Jamaican dollars in new taxes on sweet drinks, cigarettes, alcohol, tourism, digital services, and more. All of this is being sold as a Hurricane Melissa recovery plan after the storm wiped out up to 40% of Jamaica's annual output in a single night. But for you, it boils down to one hard question. How much more are you going to pay every month just to live the same life? In this video, I'll break down what exactly gets more expensive, how much more you'll pay on drinks, rum, Netflix, hotel stays, and more. Who really carries the weight? Ordinary Jamaicans, big business, or the state? Here's what you need to know. On October 28, 2025, Hurricane Melissa, a Category 5 monster, slammed into Jamaica. The damage? An estimated US $8.8 billion. That's roughly 41% of Jamaica's entire GDP wiped out in one night. Government revenue collapsed. Reconstruction costs skyrocketed. And Finance Minister Fayval Williams faced a brutal choice. She stated that we could borrow to cover everything, but we lived through the debt trap before. That's not a road we're taking again. So for the first time since 2016, Jamaica is introducing brand new taxes. Williams said it plainly. It took a Category 5 hurricane for that to happen. The package, 29.4 billion Jamaican dollars for 2026-2027, with more coming in 2027-2028. Here's where the new money comes from in 2026-2027. Sweet drink tax, 10.1 billion Jamaican dollars, the biggest piece. Cigarettes and pure alcohol increases, about 2.7 billion Jamaican dollars combined. Environmental Protection Levy change, approximately $3.6 billion. Motor vehicle duty concessions change, $1.3 billion. Digital services GCT, $300 million this year, rising to $4.2 billion next year. Plus NHT transfers, $11.4 billion continuing every year. And in 2027, the big one lands. Tourism GCT moves from 10% to 15%, projected to bring in about $11.4 billion a year. Let's break down each one. A brand new special consumption tax of $0.02 per milliliter on non-alcoholic sweetened beverages. Effective May 1st, 2026. What counts as sweetened? Sodas, sweetened fruit juices, energy drinks, flavored drinks with added sugar or artificial sweeteners, both local and imported. Here's what that means for your pocket. A 300 milliliter bottle, small soda, $6 increase in tax. A 600 milliliter bottle, regular size, $12 increase in tax. A 2-liter bottle, $40 increase in tax. Health officials say Jamaica is ranked around 10th in the world for sugary drink consumption. Roughly 70 to 86% of children and 7% of adults drink sugary drinks daily. But industry leaders aren't buying it. William Marfood, chairman of Wizinco, one of Jamaica's biggest beverage companies, fired back hard. The tax treats all sweetened drinks the same. Low sugar drinks, taxed like high sugar ones, are regressive. It hits poor households hardest. Opposition spokesman Julian Robinson agrees. Demand for these drinks is relatively inelastic. People won't change habits much, they'll just pay more. And the government's own revenue projection proves it. They're expecting $10.1 billion, which means they don't think consumption will drop significantly either. So is this about health or revenue? You decide. Next, the classic sin taxes. Cigarettes. Effective May 1st, 2026. Special consumption tax per stick goes up by $3 from $17 to $20 per cigarette. Expected revenue, $1.1 billion. Pure alcohol, effective May 1st, 2026. GCT on pure alcohol jumps from $1,230 to $1,400 per litre of pure alcohol. Expected revenue, $1.6 billion. Who really gets hit? Regular bar drinkers. Bar and nightclub owners on tight margins. Party promoters. Small corner shops. These are textbook sin taxes. The government sees them as both good for revenue and public health. The question, do these taxes actually change behaviour? Or do people just cut something else from their budget to keep their rum and cigarettes? Some people will cut back. Others will just spend more. Here's a big one coming in 2027. Effective April 1st, 2027. GCT rate on tourism activities jumps from 10% to 15%, matching the standard rate. Expected revenue, $11.4 billion annually. This covers hotels, attractions, tours, restaurants in tourist zones, the entire tourism experience. Why the delay? Government says they're giving the industry time to recover from Hurricane Melissa before hitting them with the increase. What does this mean for regular Jamaicans? Staycations get more expensive. That family weekend at a resort just got pricier. Local attractions and tours cost more. Small guesthouse and Airbnb operators face higher costs. For many Jamaicans, short-term rentals are critical income. They help pay mortgages, supplement household income, fund kids' education. A 5 percentage point jump in GCT could be the difference between profit and loss for small operators. And for Jamaica's tourism competitiveness, that's a gamble the government is taking in 2027. Effective January 1st, 2027, GCT now applies to digital services and intangibles supplied from abroad. In plain talk, any service you pay for online but coming from abroad, Netflix, Disney+, Spotify, iCloud, Adobe, Zoom, online courses, will now attract GCT just like a local service. Expected revenue, $300 million in full year 2026-2027, last quarter only. $4.2 billion in full year 2027-2028. The government says this is about fairness. If you consume it in Jamaica, you should pay tax in Jamaica, just like local businesses do. You'll notice your streaming bills creeping up. Cloud storage costs more. That software subscription feels heavier. Together, it's real money. Who feels this most? Remote workers, digital professionals, students on online platforms, content creators paying for editing software and cloud storage. Environmental protection. Levy. Effective May 1st, 2026. Rate increases from 0.5% to 0.8%. Base expanded to cover 100% of domestic sales, up from 75%. Expected revenue, $3.6 billion. This levy applies to imports and certain domestic goods. It'll show up in prices of imported goods, appliances, electronics, some locally manufactured products. Motor vehicle duty concessions, effective May 1st, 2026. Tightening concessions for public officials importing vehicles. Expected revenue, $1.3 billion. National Housing Trust, NHT transfers. Continuing $11.4 billion per year from NHT to the Consolidated Fund. Runs through full year 2030-2031. There's ongoing debate. The NHT was created for affordable housing, but government has been using it for general budget support since the 2008 crisis. Critics say it diverts funds when housing need is sky high. Hurricane Melissa created a massive budget hole. Can't go back to wild borrowing. Jamaica spent years escaping the debt trap. Some measures target health risks: sugar, cigarettes, alcohol. Income tax threshold moving to $1.9 million from April 1st, 2026. Roughly $4,000 more take-home per month compared to old threshold. The critics state that cost of living was already brutal before these measures. Sweet drink tax is regressive. Poorer Jamaicans spend larger share on these products. NHT money still being raided when housing need is massive. Why not target higher-end wealth more? The real test: do these taxes actually reduce health problems and strengthen the budget, or just squeeze the same people again? So I want to hear from you. What are you planning to cut back on when these taxes hit? Sweet drinks, rum, streaming, or something else? Drop your thoughts in the comments, share this with your family group and co-workers, and hit subscribe if you want more breakdowns like this. No hype, just straight facts so you can protect your pockets. Until next time, stay informed, stay smart, and watch your money.